Hello guys, Finance Trader speaking. So on this video, I'll be analyzing Boom 500. So this analysis is based on top-down analysis. So as you already know, um when you look at the trend of Boom 500 in a weekly time frame, the price is bearish, and for a bearish price, we mostly focus on the selling opportunities, not the buying opportunities. So with this one, we're going to look at this price on how it reacts on our points of interest. So firstly, we have this weekly imbalance, which was filled by the price. So the price has just filled this imbalance, and then after filling this imbalance, we see the price dropping towards downside, and then it takes out this low. So we have break of mega structure. Here towards the downside. Now after breaking this mega structure here, price reacted back so that it can mitigate this order block. So we have this order block mitigation. Let me identify this order block. So we have mitigation of this order block. Now after mitigating this order block, we see the price dropping towards downside. And the other thing that we can notice here is the order flow. Order flow is just simply continuation mitigation of what? Of our order block. So we see the price mitigating an imbalance, and then at the same time price did mitigated our order block. Now after mitigation of this order block, we see the price dropping again towards downside. Now when the price drops aggressively towards downside, it breaks the previous market structure. So we have break of market structure here. Now after breaking this previous mega structure, this aggressive move which broke the previous mega structure, it left what? An imbalance behind. Now we have an imbalance here. An imbalance, as you already know, is a gap. So when you have a gap in the market, the price has to come back so that it can refill this gap. So we have this gap here. So the price has to come back to refill this gap, and most of the times the price just fills 50% of this gap. So that's why we see the price coming back to this level, filling this gap. Now after filling this gap, the price continues to go down to break the previous mega structures. Now looking at the current price, it shows scoring. We have a break of mega structure here, and then we have break of mega structure again here. Now looking at the current price, some traders are looking for selling opportunities around this level in Boom 500, but this area here, it's an area of liquidity, which means there's accumulation of retail traders around this level. So that's why most traders are looking for selling opportunity. And what will happen here is that the price will keep pushing up until it can take all traders who are trying to do what? To sell around this level. So in this case, we're going to look at the price on how it reacted on our previous order block. So it did react on an imbalance, and then it did react on what? On this order flow to create what? To create an order flow that we have. So whenever we have this kind of order flows, they generate what we call trendline liquidity. So when you have trendline liquidity in the market, let me show you. So we have this trendline liquidity over here. I hope everyone can see it. So we have this trendline liquidity over here. So the price is going to be forced to push up so that you can clear all this liquidity above this trendline. So our potential sell level here, is this order block. Because whenever you choose an order block, you have to choose an order block which has a liquidity pool. So liquidity that we have right now is the trendline liquidity, which can be stripped. But looking at this OB here, when you choose this order block here, it's an order block that is around the accumulation phase. And you can't choose an order block which is inside the accumulation phase. Rather, you have to choose an order block that is above the accumulation phase, so that when the price reaches this order block, it has something to clear. So our order block that is valid in this case is this upper order block. So this way you have to sell boom 500. Remember, we are still in weekly time frame. So if you are in weekly time frame and then we have this set up in weekly time frame, it means we have to do what? We have to start to look for buying opportunities. Yes, the price is it's in a downtrend. There is no change of character at this point. But looking at the structure of the market, it tells us that the price has to keep on buying until the price can continue its movement. So in this case, we are going to start to look for buying opportunities here until the price mitigates our point of interest. And then after mitigating our point of interest, that's when we can do what? That's when we can start to look for selling opportunities, which is a swing trade. But in case whereby you are looking for buying opportunity, that means it's a scalp, not what? Not a swing trade. So keep this in mind. So now let's move from weekly time frame, then we check daily time frame. Again, we are doing our top down analysis. So from weekly, we go straight to daily. And then when you look at the daily time frame and you look at the structures of the market, when you look at the daily time frame and when you look at the structures of the market, it shows scoring. Currently, the price is bullish, and the way price reacts on our bullish order block is so good. So as you can see, the price is bullish, is respecting our order blocks, and even imbalances, it's respecting our imbalance. So in this case, you just go straight into looking for buying opportunities. You just go straight into looking for buy opportunities, get into your 1 hour time frame, and then identify an order block in your 1 hour time frame. So the other thing that we can do here, our final analysis, we're going to make it in 1 hour time frame. So in 1 hour time frame, firstly, let's see how the price reacts. It reacts on our imbalances. As we can see that here we have an imbalance here. The price just reacted well in our imbalance. And then the other thing that we can see is that the price just moved up aggressive after feeling this imbalance, and then it did break this previous mega structure. And then after that, we see the price coming back to refill these gaps which are left behind. Now, after refilling this gap, the price kept on moving up aggressively, and then it breaks this previous mega structure. Now, after breaking this previous mega structure, we have what? We have this inducement here. So remember that your imbalance, it can act as a liquidity provider from the market. So we have an imbalance here, and then some traders are buying from this imbalance, so they generate liquidity at the same time. So which means when we identify an order block, we're going to choose an order block that is below an imbalance. An order block that is below an imbalance, most of the time it is always valid. In this case, I think this one is invalid. So let's choose the one that it's at the lower level. So this is our order block. And when you look at the schematic that we have here, it's imbalance fill and then order block, which created an order flow. And then all this level here, this one we can mark it as an order block, which is an obvious order block. We can mark this as an obvious order block, which means it's an inducement order block, because there's accumulation from this order block which needs to be cleared before the price can go up. So in this case, you are going to mark this as an inducement. So this is an inducement, and then wait for the price to come back, and then after coming back, we can now continue the trend, and then the price goes up. So that's how we approach Boom 500.